Hey everybody, it's Norris with the Norris Group. It is Friday, August 9th, and when it comes to iBuyers, do you think they're here to stay? That and much more as we cover the biggest headlines in real estate. Up on the radio show and podcast, we have Mike Cantu, one of Southern California's greatest real estate investors and just a really cool guy. We talk about Mike and how he got started in the business. We talk about his rental portfolio, what events in his life shaped the direction of his career, his mentor Mick Blackwell, and who his biggest influencers are as a teacher. So you won't want to miss that on the radio show and podcast this week. You may be wondering why I'm dressed in a tuxedo. Well, we are officially announcing I Survive Real Estate. You'll find out more about that at the end of this video. We have some amazing speakers. The event is September 27th, and it's all for a great cause. A beautiful event at the Nixon Library, dinner, networking, and a panel of industry experts that you won't see anyplace else on the same stage. September 27th, all of it goes to charity, and we've almost raised $1 million together since 2008. Hang out to the end of the video to watch more information about that event coming up September 27th. Home prices increased 3.4% year over year in June, according to CoreLogic. Mortgage applications increased by 5.3% from last week, according to Mortgage Bankers Association. And no wonder, because last week the Feds lowered interest rates and interest rates have been going down. Home prices in the metropolitan areas increased by 9.1% in the second quarter. Mortgage rates saw a tremendous decrease in the latest Freddie Mac survey, with 30-year rates now at 3.6% and 15-year rates at 3.05%. And foreclosure filings decreased 18% from last year, coming in at a total of 296,000. Adam Data Solutions analyzed what impact grocery stores have on the housing market. Adam looked at current average home values, 5-year home price appreciation from 2019 versus 2014, current average home equity, home seller profits, and home flipping rates on over 1,800 zip codes nationwide, with at least one Whole Foods store, one Trader Joe's store, and one Aldi store. Home prices near Trader Joe's realized an average home seller ROI of 51% compared to homes near Whole Foods with an average home seller ROI of 41% and Aldi 34%. Properties near an Aldi are an investor's cornucopia with an average gross flipping profit or ROI of 62% compared to properties near Whole Foods, which had an average gross flipping ROI of 35% and Trader Joe's 31%. So what grocery stores are your flips near? And it's interesting to note that it's not necessarily the grocery store, it could be the economy, because those stores go into very specific markets, but it's interesting to see. Maybe those will be a telltale sign, if you know when it's coming, that your ROI might increase if those stores are coming to an area near you. Spending on remodeling is expected to drop further, according to MarketWatch, and some think it already has stopped dropping. Just a sign of another weakness in the housing market? We'll have to wait and see. This is all according to the leading indicator for remodeling activity from the Joint Center of Housing Studies at Harvard University. Chris Herbert there says that the slowdown is related to several factors, including a decrease in home sales and home building in combination with slower permitting gains. The National Association of Home Builders points to a slowdown in home price appreciation and that it isn't outpacing income growth like it has in previous markets. So we'll have to wait and see, but many are thinking we're on the horizon of a recession. According to Redfin, home buyers are starting to win the bidding wars. Only 11.2% of offers written by Redfin agents on behalf of their home buying customers nationwide faced a bidding war in July. That's down from more than 45% a year earlier and the lowest rate since at least 2011. The nationwide bidding war rate hasn't surpassed 15% since November of 2018, after falling steadily from a peak of 59% in March of 2018. The chief economist Daryl Fairweather says home buyer competition has been mostly flat, which was beginning a fast descent this time last year as mortgage rates were inching towards 5%. So now with interest rates dropping, it'll be interesting to see if it picks up, especially as we're heading here, at least in California, into typically our slow season. The market is seeing a huge growth in iBuyer model activity, and although we have been talking about it a lot lately, they have been around for 4 years, growing by 25% every year for the last 4 years, and I think most people are going to be surprised how aggressive they are going to be growing in California. The numbers won't come out, of course, until the 2020, but I've been watching the growth, and it is massive and surprising. Companies like Zillow and Redfin are going heavy and making it a big part of their business model. So Housing Wire asked, is it worth the convenience of a speedy all-cash offer, or are home sellers selling themselves short by going this route? Well, that's what a recent paper published by the company Collateral Analytics tried to find out and answer that very question. The idea is to sell quick and as is, but it comes with a price. The paper dissected the math behind the model, estimating that sellers end up paying between 13 to 15% more when they work with an iBuyer. This covers a difference in fees that range from 2 to 5% greater than a traditional real estate agency, plus an allowance for repairs and other things, so 3 to 5% to cover iBuyers' liquidity risks and carrying costs. The iBuy model comes with a bunch of risks for these companies. Number one, they're competing with each other in certain markets, outbidding each other. Then they've got the holding costs, the issues at the vacant property, and a lot of them are using technology and apps to let people in without really anybody being on site, so there's some risks there if people get injured. And God forbid that there's a recession. There are a lot of things to keep in mind, and some of them are operating on really tight margins. Zillow announced this week during their information reports, because they are publicly traded, that they've lost a massive amount of money. Although they've made a lot, they've lost a lot. So it's a mixed review as far as iBuyers if this is working. While Collateral Analytics lists several companies that are investing big in the iBuyer model, it also states that only the most efficient firms with enough capital and market share are likely to survive. And that's why you see partnerships between Opendoor and Redfin. The amount of money they're having to spend on marketing Opendoor as a brand new entity is massive. And of course, all this depends on how many home sellers are willing to pay for the convenience ad. So if we hit a recession, are these models likely to stick around? Are people going to try to get more for the home than they think it's worth? It's going to be very interesting to watch over the next couple of years as the economy unfolds, as we enter election season. So I'm interested to know what you think. Are they here to stay, and will they survive a recession? What do you think? If you're on YouTube, please leave a comment below, and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video, and if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Hello, I'm Aaron Norris with the Norris Group, and it's that time of year again. It's our 12th annual I Survive Real Estate Gala coming up September 27th at the Nixon Library in Yorba Linda, California. Since 2008, you've helped us raise over $900,000 for charity. Real estate professionals from all over the state join us, dressed to the nines, to enjoy incredible networking, a scrumptious dinner, and a panel of industry experts in the incredible East Room at the Nixon Presidential Library. Our experts will cover real estate targeted regulation, economic effects of tax reform, affordable housing, trends in technology, and everybody's favorite, the panel's discussion on the forecast for the year ahead. Our 2019 expert panel includes some of our all-time favorites, including Doug Duncan, Chief Economist of Fannie Mae, Sean O'Toole, President of Property Radar, Jim Park with the Mortgage Collaborative, Mark Leswing, a blockchain technology expert, John Burns with John Burns Real Estate Consulting, and of course, Bruce Norris with the Norris Group, and me, Aaron Norris. 100% of sponsorship and ticket sales go to Make-A-Wish and St. Jude Children's Research Hospital, two children's charities dedicated to working with kids struggling with life-threatening illnesses. And since the Norris Group pays for the entire event, all money raised via ticket sales and sponsorship goes directly to these charities. You can pay for a seat to the event by donating $200 to the Norris Group team at bit.ly/2019 ISRE. Each $200 donation reserves you a seat to the live event, but there is a fun way to attend at zero cost to you. This is the 200 Plus Challenge. The 200 Plus Challenge gets you a preferred seat and a chance to win a special one-on-one consultation with Bruce Norris. And you'll be featured in the event program, on the screens and at the live event, and also on the videos that we create after the event. Instead of personally making a donation, simply join the fundraising team and raise donations from family, friends, and colleagues to cover the cost of admission. Here's how it works. Register for the team by going to bit.ly/2019 ISRE. Once at the team page, click Sign Up and fill out the required information for setting up an account. You'll get your very own fundraising page that you'll be able to promote for the cause. Big and small donations all count and are tax deductible to your donors. The competition ends on September 14th, and the top two fundraisers over $200 from the team will be notified shortly thereafter that they've won. This is a per-person competition, so couples participating in the 200 Plus Challenge need to apply separately. For information about speakers, the venue, our amazing sponsors, and tickets, visit iSurvivedRealEstate.com. we'd love to see you out and about on a bunch of different things we're doing. August 15th and 16th, we're going to be in Florida. I guess there is a chance that you could tag on if you make reservations today, Friday, but I will be leaving Sunday. August 21st, 10 decisions to make before the next downturn with Invest Club. That's in Fullerton. And August 23rd, I'll be at WeRep talking about technology and innovation in real estate. For those in Northern California, check out the calendar. Early September, we're going to be at SJREI in San Jose. And September 14th, we're going to be doing a different version of Cashing In on a Boom. We're going to be focused on opportunity zones, ADUs, and new models that will help you create value in a market where it's harder to find value, speaking specifically to those iBuyers. So check out the calendar. 2 big events up in San Jose area. We'd love to see you while we're up in Northern California. With more information on hard money loans, including fix and flip, buy and hold, and new construction, check out thenorrisgroup.com. Or if you want more information on passive investing with trust deeds, mortgages, and notes, check out tngtrustdeeds.com. With that, have a fantastic weekend, and we'll see you next week.